What's good, y'all? It's your boy Shaq with a dollar sign, and I'm back with another journal entry. Just kind of breaking down the trades I took today, what happened, the lessons I learned, whether or not I'm happy about the way I executed my trade. Just the same old. Just documenting the journey for you guys, being as transparent as I can. Today was actually a good day in the markets. I did take one loss, and the only reason why I took that loss was because price pushed against me a certain amount on my trade idea, and from a level of wanting to keep my account or not allow my account to go into or my trade to go against me a certain amount, it's most best for me to have closed that trade, accepted the possible loss, and then moved on looking for another entry. Just because over my, let's say, 3 years, and over the last year especially, I've noticed that with trading, um, it's not about winning every single trade. It's about understanding how to maintain and preserve your capital. And what I mean by that is if you were to say you risk 1% a day per trade, right? And you allow your stop loss every single trade to be hit, you lost 1%. So let's say Monday you have a winner, right? 1% added to your balance, right? Then Tuesday you have a loser. You're now at zero, break even, right? Let's say now Wednesday you have another loser. You're now down 1%. You know what I mean? It's like not closing out your losing trades and allowing it to always hit full stops will always have you in a yo-yo effect or a seesaw, where it's like you're never actually making money. You're just making enough for you to be break even, and that is something that I had to learn. I wouldn't even say quickly. That's something I had to accept, just because if I want longevity in this friggin' industry, that's what you have to do, right? You have to cut your the thing is you'll read a lot of books or you'll hear a lot of trading gurus mention the fact of cut your losers short and let your winners run, right? And that is something that's 100% true, right? When you're trading, it's not something that's automatic. You have to kind of train your brain to accept that fact. So today I took two trades. I took one, I mentioned, I had one loser, and that's just because I know how much I'm willing to allow price to go against me on the trade idea before I close. Because out of the last year, 2, 3 years of me trading, I've seen multiple times if price goes against me a certain amount of percentage or a certain amount of dollar value, a lot of times that trade is a loser. And especially with the trade ideas that I took today, I took two NASDAQ buys on a 5 minute support. The reason why I called it, or I say this is a 5 minute support, is because from a market perspective, we had multiple breaks of structures to the upside. I I'll be straight with you guys. I don't really use indicators anymore. I only use them to get an idea on my bias to say, okay, what is happening. So when I first come into these markets, I'll quickly turn on my indicators. Very quickly, I turn on 13, the 50, and the 100 EMA, and just to get an idea of, okay, this is what happened, this is what didn't happen, and then I'll turn it off because now my main focus is mainly going to be market structure. So from a market structure bias, what happened was I noticed that since yesterday we were having multiple lower lows. We had a higher high be made here at 120, but then we also broke this previous low instantly. So again, we were trending more on the downside up until 2 o'clock yesterday. Then I then came to the markets today, and what I noticed was, okay, we're having multiple higher highs being made on the 5 minute. I trade the 5 minute. I don't necessarily. I'm not necessarily. I don't necessarily have to look at the 1 hour, etc. I just know based on how long I've been trading, how many candles to look back to kind of gauge what happened on the 1 hour. Because again, every timeline or time frame correlates with each other. One just the lower you go is the more data you see in that higher time frame. So if you look at the 1 hour, it might look like one or two candles, three candles. But then you go to the 5 minute, you're gonna see every single candle that made that 1 hour move. But back to the point. So basically, I saw that price had broken its previous high. Price was over the 200 the 13 and the 50. So obviously buyers got in, but the most important factor that I took out of today's session was price broke lots of market structure to the top. So once I saw that, I noticed that there was a 5 minute demand being made, or left a 5 minute gap left here, that I was willing to take a buy from, just because I know from a 930, like from Nasdaq 930, that candle tends to be huge. It goes crazy. You know what I mean? So it's kind of plausible for, if price had wanted to sit around this area for a bit, for price to on the 930 open hit this area of demand, fill the gap, and then possibly push up. That was very plausible. But then at the same time, what I noticed was there was a 5 minute area of support being made. Some people don't necessarily trade that way. It is what it is. I don't really care. Like I said, I understand from a perspective of every single time frame correlates. So we saw 5, 10, 15, 20 minutes of rejection. So now you go to the 3 minute, it looks a lot different, right? Now you see exactly how many candles itself reject this area. Then you go down to the 1 minute. You get what I mean? Now you're seeing the details of how many candles rejected this area. So from a 5 minute, seeing 20 minutes worth of rejection is plausible to me. Even 25, 30, it's plausible. It's telling me that there's something happening in that area that is not allowing price to drop below it. It's wicking, it's wicking, it's wicking. So this could be an area of 5 minute support. I got in on this candle here. Remember I said I took 2 trades today. The first one was a loss because price went against me. So I got in. I'm gonna just move this over for just for, I guess, to make it more clear. So I got in on buys once this candle wicked off of this area and then pushed above the, what time was it? The 850 candle. Once price pushed above, price also, like I said, wicked downwards. When price wicked downwards, I closed about here. Again, simply because I'm not comfortable risking. If I risk 0.5% on my trade per day, I don't want to accumulate a full 0.5% loss on one trade. Like, I'll be willing to take a 0.5% loss on the day if I was with 2 trades. If it was a thing where I was able to cut the trade early and then still left me with, like, let's say I risked $50 today, $50 per trade today, or not today, but $50 per trade. Price pushed against me $25. I'm going to accept the loss and move on and see if there's another opportunity for me to get in. And it's not about making back what I lost. It's about executing on a trade that aligns with my analysis and my style of trading, and allowing that trade to hit a 1-to-1. Because if I risk $50 on this trade here and then closed off at negative 25, that still leaves me a negative 25, positive $25 wiggle room where I can get back in a trade. And if the second trade I got back in goes against me negative 25, that hits my threshold of $50 maximum loss on the day for this account. So what happened was price pushed against me. I tried to close out at negative 25, but the way that price pushed so strongly, ended up being negative 33. It is what it is. I accepted that loss. And then I also noticed that price started to wick off of the area and closed. Once it closed above, I got back in. And then, yeah, the trade ended up going 2-to-1. I closed my trade. I closed partials, or took partials at 1-to-1. And then I left my runner to go to 2-to-1. I could have held a lot longer, yes, if you're looking at like the grand scheme of things, but you have to be honest and realistic. When you take your trades, this shit doesn't exist. None of this stuff exists. You only can analyze and take your setup on what you saw and what you knew. So me seeing price hitting a 2-to-1 RR, sorry, let me fix that. Me seeing price able to hit 2-to-1, none of this was guaranteed. And I know at 9:30 around the corner, 9:30 candles tend to go crazy. So for all I know, I could have held this setup, and then this could have completely tanked back down to here, and then I could have lost way more than I wanted to. So what I did was, once price hit my 2-to-1, I immediately got out the trade, walked away, and for the day, I ended up being positive. So if I risk, I end up being positive $23.55. My initial entry, which was the first one, I lost $33.60. I got back in, closed my trade out, or took profits at 1-to-1, which locked in $32.90. and then left a runner, which was maybe about $10 at the time. No, I would say $18, about $18. I'm just $50. So I left like an $18 runner. Um, it ran, it pushed to about 2 to 1, and then I took my profits. So I ended up being positive on the day. From a execution and trade analysis standpoint, today is actually a day where I can say like I'm very happy with the way that I executed and the way that I managed my trade. Yeah, it kind of sucks that I closed this trade out early because if I had held, it would have been a much higher RR. But we don't know that. You know what I mean? We don't know what's gonna happen until it happens. So me managing my loss and me keeping in mind that I want to build equity and how much equity I'm willing to risk on the trade. Me closing out the trade where I did is not something that I'm mad about. If you even just look at the size of the stop loss, like there was not a lot of wiggle room I had on the trade, so it's very plausible for the trade to go against me. You know what I mean? This was like a 10 pip stop loss. So 10, if you know anything about Nasdaq or indices, even gold itself, 10 pips on some of these pairs is nothing. Like it's nothing. I've seen like I'll show you a prime example like this right here. Let's say just for shits and giggles to tell you how much this ran. This is a 35 pip stop loss. You know what I mean? Price ended up going 74 pips. So 10 pips on something that can move 74, 100 pips in the span of a freaking candle. You know what I mean? It's from a trade management standpoint, I'm very happy with the execution. Again, like it is what it is. I'm happy the fact that I was able to close out green today. I closed out green on Monday as well, so that's good. We got one more trading day left in the week, and then I'm done. I'm not trading Fridays anymore just because Fridays are ass for me. But yeah, we have one more trading day left in the week. See how that ends. But all in all, for this week, like I'm up. Even if I was to take a loss on Friday, I'd still be up. And this is why trade management and understanding, let me close this, sorry. This is why trade management and risk management and equity management is very important with trading. It's not about winning every single trade, guys. It's really not. I'm telling you this from the bottom of my heart, and this is where like a lot of people get it messed up. They think they need like the highest win rate, and realistically, it's not. It's about how you manage your trades and how you, whether or not you allow your winners, or sorry, whether or not you allow your losers to hit full stop loss, and then make it like a yo-yo or a seesaw, if you will. Where again, I'll break it down like this: if you friggin' risk $100 per trade, $1,000 per trade, and on Monday and Tuesday you lost $2,000, right? There's only two other trading days that I would trade on during the week. That would leave Thursday, Friday, right? If I win Thursday and Friday and I just close out at a 1-to-1, the entire week I'm just break even. Whereas let's say I risk $1,000 per trade, Monday, Tuesday, Thursday, Friday. And on Monday, out of the $1,000, I close out at negative 500. And on Tuesday, out of the $1,000, I close out at negative 500. Right? That means I'm down 1,000. Then on Wednesday, the 1% risk ends up hitting 1-to-1. That's 1,000. I'm at break even automatically. And then on the Friday, the next trade ends up going 2-to-1, or even let's say for shits and giggles, it goes 2-to-1. Right? That means 2,000. I'm profiting $2,000. Whereas the other example I gave you, you're just seesawing and doing break even. And this is where when they say cut your losers, like don't cut your losers, let your runners run. That's why they say that. Like a lot of us are like hell bent on like saying, oh, we win 80% of your trades, this and that. That's wonderful, but like it's unrealistic. And at the same time, if you're allowing your trades to always hit full stops, I can guarantee you're just doing the seesaw effect, where it's like 1 month you could be up just because of the fact like the cards were right, everything, the markets were right, and you were able to win every single trade. And then the next month, because you won friggin' 10 or you lost 10 trades in a row, the month prior to, you're now back at break even $0. You know what I'm saying? That's literally the trap that a lot of us traders find ourselves in. And I'm not gonna lie to you, I was guilty of that, where I could win trades 100%, but then when I lose trades, I'm losing full risk. So it's like I'm always at that break even point, and then how can you grow an account or make money if all you're doing is consistently doing the up, down, up, down? Again, price, when you're trading, what your account should look like is this. You know what I mean? That's what it should look like. And just in case my hand came out the screen, it's this. Right? It's gonna go up, should go down. It's gonna go up, go down. It's gonna go up. You might have a winning streak and it goes up, 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 and then a little bit down, then up. That's how it goes. But if your account looks like this, you go up 1,000, down 1,000, up 1,000, down 1,000, up 1,000, down 1,000. All you're doing is a straight line. No matter how you want to convince yourself, you're doing a straight line. So from an execution standpoint, I'm happy. Today was a good day. I don't really care about what happened afterwards. Trade could have won X amount, but like I don't know what's gonna happen. I'm very happy with my equity preservation, and I'm very happy with the fact that I closed the trade when it pushed against me because that is my rule. And the only thing I have is my rules. And as long as I can keep that methodic and keep that robotic, then I'm hoping and aiming for this to be another step for me, another step net positive towards my breakthrough. Um, it's a journey. You know what I'm saying? It's not a sprint. It's a journey. So where I'm at in my journey is this. I just need to keep going. We all need to keep going. As always, it's your boy Shaq with a $. I wish you nothing but peace, love, and prosperity, no matter where you are in your journey. And yeah, we showing up on Friday, not Friday, sorry, we're showing up on Thursday. Let's get it. Peace.